Chapter 4: The Basics of Real Estate. In this chapter, Robert Kiyosaki focuses on the basics of real estate investing. He explains that real estate offers one of the best opportunities for wealth creation, and even more so in times of market uncertainty. However, investors need to have a solid understanding of the real estate market and how it functions. Kiyosaki explains the three fundamental processes of real estate: cash flow, appreciation, and mortgage reduction. He stresses the importance of generating positive cash flow and building equity through mortgage reduction. He also emphasizes the need to be informed about the local real estate market and available properties in the area. The author goes on to discuss different types of real estate such as residential, commercial, and industrial, and explains their respective advantages and disadvantages. He advises readers to invest in real estate with a purpose, such as rental income, as it provides a steady stream of cash flow. Kiyosaki also highlights the importance of networking with other real estate investors and professionals such as brokers, agents, and contractors. He believes that building a strong team is crucial for success in real estate investing. Chapter 5: The 10 Investor Controls. This chapter emphasizes the importance of taking control of one's investments. Kiyosaki introduces 10 investor controls that help readers take charge of their investments and secure their financial future. The first investor control is education. Kiyosaki stresses the importance of continually learning about investing, markets, and trends. He believes that knowledge is power and that investors should be well informed to make wise investment decisions. The second control is cash flow. Kiyosaki explains that cash flow is the lifeblood of any investment. He explains how to calculate cash flow and how crucial it is for success in investing. The third control is risk. Kiyosaki believes that investors need to be comfortable with risk and should be prepared to take calculated risks to achieve higher returns. The fourth control is professional advisors. Kiyosaki advises investors to seek out professional advisors, such as financial planners, attorneys, and accountants to guide them in making sound investment decisions. The fifth control is finding the right team. Kiyosaki reiterates the importance of building a strong team of professionals, such as real estate agents, contractors, and property managers. The sixth control is due diligence. Kiyosaki stresses the importance of conducting thorough due diligence on potential investments to minimize risk. The seventh control is structures. Kiyosaki advises investors to structure their investments in a way that minimizes tax liability and protects their assets. The eighth control is exit strategies. Kiyosaki believes that investors should always have an exit strategy in place, whether it is a short-term or long-term plan. The ninth control is measuring performance. Kiyosaki advocates tracking investment performance to learn from successes and failures and make better investment decisions in the future. The 10th and final control is financial controls. Kiyosaki advises investors to manage their investments conservatively and avoid over-leveraging. Chapter 6: The Investment Process. In this chapter, Kiyosaki outlines the investment process for real estate. He stresses the importance of having a clear investment plan and understanding the process. The first step in the investment process is setting investment goals. Kiyosaki believes that investors should have clear and specific investment goals, such as earning monthly cash flow or generating long-term appreciation. The second step is to select a market. Kiyosaki advises investors to research different markets and select one that meets their investment criteria, such as job growth, population growth, and rental demand. The third step is to identify potential properties. Kiyosaki explains how to evaluate potential properties, including assessing their cash flow potential and the condition of the property. He also discusses the importance of analyzing the area and its demographics. The fourth step is conducting due diligence. Kiyosaki advises investors to conduct thorough due diligence on any potential investment, including title searches and inspections. The fifth step is to finance the investment. Kiyosaki explains how to finance an investment property, including several options, such as a conventional mortgage, hard money loans, and seller financing. The sixth step is to manage the investment. Kiyosaki stresses the importance of managing the investment effectively, including finding a good property manager and monitoring cash flow and expenses. The final step is to exit the investment when the time is right. Kiyosaki advises investors to have an exit strategy in place and to be prepared to sell the investment when the market conditions are favorable. Conclusion. In conclusion, Robert Kiyosaki's Rich Dad's Guide to Investing offers valuable advice and strategies for investors looking to build wealth through real estate. By focusing on the basics of real estate, taking control of one's investments, and following a clear investment process, Kiyosaki believes investors can achieve success in the real estate market. By implementing the 10 investor controls and working with a team of professionals, investors can reduce their risk, maximize their returns, and achieve financial freedom